We know it's a fallen giant. It used to be the company that everyone loved, that produced games that we could all relate to in our childhoods, and now we don't want to touch it with a 10-foot pole. But is it worth it as an investment? And if not, what's actually going on? Why is it a disaster, as people are saying? Well, hi there, thanks for tuning in. My name's David, and today I'll be analyzing Ubisoft Entertainment, this fallen angel of gaming that I've played their games, many people have played their games throughout many generations, and recently the news has taken a turn. I mean, Ubisoft is reportedly considering a buyout by Tencent. This is crazy given that before they staunchly had denied rumors that they were considering being bought out. So, how bad must the situation be that they are actually considering a buyout? I mean, we know that Assassin's Creed Shadows got delayed. We know that the Star Wars Outlaws release was just not that good. They definitely underperformed sales. So at the end of the day, how bad is the situation? Well, if you look at their last yearly report for the fiscal year 2023-2024, they actually are talking about record net bookings, so record sales really, and how everything is up. And then if you look at the things such as net income, well, they went from actually losing money, bleeding some cash in 2022, 2023, to now making money again in 2023, 2024, which is very impressive, although they do dilute your shares. That's also important to know because at the end of the day, even if you're an owner, and even if they're earning more money, if they're diluting shares, each share of Ubisoft you own is actually worth less after the dilution. So far, it looks okay. Minus the share dilution, everything is looking fine. But then you look at the free cash flows and the closing cash position. I mean, here you see that the opening cash position is now worse. You see that the cash flows from operating activities got worse. You see that the net free cash flow is now worse. That's actually the cash money that Ubisoft is dealing with at the end of the day, is how much cash either they get into their bank accounts and can do stuff with, or comes out. So now they have less cash to work with. So their closing cash position, and you also see because there was an increase in debt these 2 years in a row of about 300 million euros. I mean, it's not little. If you add both of these items, actually, it's about 700 million euros that have been increased in their net debt. Now, their closing cash position is almost negative a billion euros. So they owe a ton of money now, and they have a lot less money to be flexible with. With that money, they can reinvest, they can do an acquisition, they can buy back shares they're issuing right now because they need to raise money like that. So also, a big piece of news here is that they said that their financial targets are lower now, and they said they're gonna be about break even for income and cash flow. And a lot of this comes from feedback with the fact that Assassin's Creed Shadows is delayed and that Star Wars Outlaws didn't do great at all. So they're being very transparent that they're struggling a little bit. I think players know this because the quality of their games just hasn't been up to par, and they have to take it seriously. I mean, it's true. Let's do a valuation of it. So, first of all, I want to show you what it looks like if you just look at Ubisoft based on PE. Now, PE is usually trailing, so it's taking data of their profits for the last year, and then it's an 8.4 times PE, which compared to other competitors actually looks low. The industry median is about 25.4. The reason it's usually that high is because game companies don't tend to trade with their fundamentals much. They usually tend to trade a lot higher. Tech companies, too, in general, just tend to trade a lot higher than their actual earnings would suggest. So, this is something that could be deceiving because if you just look at the PE ratio and you see that, oh my God, it's going to go lower, well, you're possibly being deceived by the fact that it could look good when it's not. So, let's do something different. Let's do EV to EBITDA. Much better measure, in my opinion. Now, the EV to EBITDA is looking lower right now than its peers, which usually, well, not really though. So here's where you see all these high P's actually translate to much lower EV to EBITDA, and that means lower earnings. So in general, when you see the industry median, they're actually trading above it, and even in the forward, they're pretty close to the industry median. So you see all of these companies that may be trading in the 30s for P, and then you go here and actually EV to EBITDA is 1.6 times, 0.6 times in some cases, etc. So here is where you have to just look at more than P, why I caution against just looking at P or even looking at P at all sometimes. I mean, it can be a baseline piece of information, but it shouldn't be what makes you decide whether or not to invest in a company. So, here is the stock price of Ubisoft. It's insane. It's gone down significantly. I mean, pretty much 77% in the last 5 years, a market cap of 1.71 billion euros. Compare that to a debt of 1.3 billion euros. Not great at all. So it's pretty bad. It recently jumped a little bit compared to its 52-week low on the rumors of being bought out, actually. So, I mean, if you bought it at this 52-week low, you could sell right now and make a decent little profit. Why not, right? But other than that, it's just looking really grim for Ubisoft. And here is what I can say of the two cases that you can take. So one is the long case. I mean, with the buyout news, the stock went up clearly. I think some people may be considering, hey, this company could break even next quarter, as they said they would, and then that would make a compelling enough case for an acquisition, or they're listening to player feedback by delaying Assassin's Creed Shadows or by changing season pass models. And then, maybe the long case is fine. So now they're a perfect target for acquisition. This combined with the admission that Ubisoft is considering this buyout gives us extra potential for excess returns. And the company could actually turn it around, but it may just take a really long time due to the delays, the fact that they don't have that many games in the pipeline other than new seasons for already existing games. So any hope of any return soon hinges on a buyout, and even then, it would take a bit for everything to finalize. The offer has to be made, it has to be accepted by the board, it has to be accepted by any regulatory bodies if need be. We saw how long Microsoft's buyout of Activision took, actually. So you would probably get your returns in over a year, pretty much. So it's going to be high risk and high reward, and it may take a while. The short case is that players seem to have lost confidence in Ubisoft, are not willing to buy its games with nearly as much enthusiasm anymore. So if it's not a great product, there's not going to be any sales and growth, really. And the increase in debt and the bleeding of cash makes it difficult to hold Ubisoft. As a person who's holding Ubisoft, would be very worried, right? If I'm holding a company that's constantly losing cash, issuing more shares and diluting me to even afford their things. And that could result in either no buyout, really, because at the end of the day, any company that's looking to buy a games company could buy someone smaller and more profitable than Ubisoft, but could also result in a buyout being negotiated for cheaper than you realize. However, shorting Ubisoft isn't recommended either. You could potentially lose way more than what you could gain. You should have shorted here, and just sold over here or bought back over here. That didn't happen already. Don't get any ideas because, yeah, Ubisoft can go to zero, so your profit can be about $2.84 per share. Well, really, it's in euros, it's about 13 euros. So it can be 13 euros per share, your maximum profit. But let's say they do an acquisition and they start turning it around, and all of a sudden it jumps to 30 euros per share. Well, you lost way more than you could even ever potentially gain. So I would recommend shorting. That's just me. But yeah, I mean, the short case here in general does sound pretty good, at least as a case not to buy. You just have to understand the amount of risk that you're dealing with when you are an owner of Ubisoft or a potential owner of Ubisoft. So I want to just posit here, what are the paths to profit? And in many ways, this applies as much to the company that you're analyzing as it is to you as an investor. So the path to profit for Ubisoft is going to be really either a buyout that then takes it private and restructures everything so they finally make money again, or alternatively, turning it around slowly, making quality games, having to let go a bunch of developers. Obviously, people are going to suffer a little bit because of this. And for us, it can look either holding Ubisoft and either waiting a long, long time for this turnaround or an acquisition, or maybe just sitting in the sidelines or seeing just literally anything else. Maybe even a market fund could just do better than Ubisoft. I mean, a market fund growing the average, you could say 5%, and giving you a dividend of 1% extra, 6% per year. It's so better than Ubisoft right now. And probabilistically, it seems like it would still be better because we could talk of a turnaround, but there's none coming soon. So anyways, I hope this video was helpful and gave a little bit of perspective in the Ubisoft situation and whether or not you should even consider it for your portfolio. And if you have any thoughts about this, I mean, if you're disappointed with Ubisoft's latest releases, or if you had good memories of Ubisoft back when they were considered a decent company, well, comment down below. I want to hear about it. Now, thank you so much for watching. Please like and subscribe if you like this content, and have a great rest of your day.